What's up, guys? It's October 8th, 2025. We're going to do a 10-minute breakdown of the E-mini where we talk about setups, context, market cycle, and leg count. If you guys want to see how I'm placing trades live, check out the membership section. That's where I'm talking about. That's what I'm doing in action, talking about pullbacks, trap traders. I have winning and losing trades. Let's get into it. Had a nice rally today. We broke out route, kind of had the opposite of yesterday. Yesterday we had a sell-off in a trading range. Today we had a breakout in a trading range. If you guys remember about the weekly chart starting to get follow through, so that's good for the bulls. They want this to be a big bull bar closing on its high. Remember yesterday I talked about how this could actually be a better fade because we have 1, 2, 3, 4, 5, 6, 7 bull bars in a row. That's an implied pullback, but didn't really close bearish. It did get a rally. So about 6 to 7 bars in a row. This was the first opposite bar, generally a better fade. And this is a form of a second leg when you have X amount of bars in a row, and then you fade the first opposite bar and you take it back to the recent high. So there is that setup. Price action is fractal. It works across all time frames. A good system will be able to be applied. Excuse me. A good system can be applied across all time frames. Tongue twister. All right. So we have a gap up. Bar one's a bear bar. Kind of looks like the gap up's being rejected, and it does get filled quickly with bars 2 and 3. Bar 2, there's three-legged pullback. It's a wedge bottom. So a gap. We have a yesterday closing a rally. We have a gap up. Could say this is the leg. Pulls back. Push 1, pull back, push 2, pull back, push 3. Wedge bottom off the EMA, kind of closing the gap. Looks like there's more buyers. We have a nice breakout bar, bar 4. Problem with bar 4, it's only breaking out past bars 2 and 3. It's not really going past bar 1's high. Immediate follow through, or excuse me, immediate pullback bar 5, testing the 50% mark. So if you want to go for a 1 bar scalp, I don't really recommend taking 1 bar scalps. It is possible, but it's more context dependent. So you could scalp the 50% mark back to the recent high. And then we have our 6 and 7. 7's a nice breakout bar, and it gets follow through 3, 8, and 9. So we know it's at least bulls are willing to buy high. It's not at this moment in time. It's not a climax bar. There's a gap happening around resistance. Look, that's happening right around yesterday's breakdown point. So bears are getting trapped. They're going to be forced to buy back shorts. And the high of the gap gets tested on bar 11. You could also say it's the high of the breakout bar 7. And that also offers a quick scalp. Market pulls back for 2 to 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. Or you could say it's a form of a double bottom. Bears get short here. Market rallies. They're going to short higher. And they're going to get out right around their original entry. Some bears will take a loss. Some bears will scale in and make a quick scalp. And then they buy back shorts and that starts to rally. So where are we in the market cycle? We have the breakout. We have the pullback. And now the market's channeling leg 1, pullback, leg 2, kind of. This is more of a complex pullback. I would count it leg 1, pullback, leg 2, pullback, leg 3. Or you could always just stick to trend line breaks if you're looking for something more like just more consistent. I look at opposite bars and trend line breaks. Trend line break here, leg 1. I have a trend line break here, leg 2. And then we have another rally. The 22 doesn't break below the 21's low. So this could all be one leg. We don't actually get a trend line break until bar 32, 30, 31. Leg 1, pull back, leg 2, pull back, leg 3, pull back. Look at leg 4, very small. And when we're in that third leg, we know our trading range is coming up soon. And look what happened. We got a very small leg 4, and then bears got an opposite channel, or the bulls got an opposite channel. So bears got a channel down, resulting in 2 to 3 legs. Leg 1, pull back, leg 2. Bears get follow through 41, but then we see 42. That means 30. Bar 40 ends up being a better fade. So you could buy this and target the recent high because bulls have had over 20 bars above the EMA. So the first gap bar is generally a better fade. And that's what we see here. It's a better fade. 42 shot to get a second leg up, and it does get follow through. 44 is a pullback. So here, there it is. This is a setup I would have taken if I was trading today. Bears get short here. They short up here. They buy back shorts right around here, and you make 1R, 1.5R. We're in a trade range, so it's not really the best idea to hold for a swing. If you were going to catch this bigger breakout, maybe you could hold for a couple legs more than just a scalp. But after that, you really gotta think about the probabilities of the market going higher. The probabilities for trend continuation go down in leg three. So if you're gonna take this is somewhat of a form of a, depends how you want to look at it. We are definitely in a trading range. Leg one, pull back, leg two, second leg trap sells off. Or if you're gonna hold, leg one, pull back, leg two, pull back, complex, pull back again, leg three, wedge top, and then look, that actually sold off. Trading ranges can get delayed second legs. So although this got second leg one, pull back, leg two, then bulls got 3 legs higher, and then this leg one, pull back, leg two, and this second leg also got a second leg. So leg one, pull back, leg two, really nice bear bars closing on its low. You can see how. So remember when I was talking about 20 bars above the EMA, first gap bar generally a better fade. The context makes sense. Higher time frame EMA lines up. So you could fade this, you could buy that, make a scalp. But look at the second gap bar. The second gap bar, 62, actually got follow through. So the context is different now because this is the first gap bar. There's a close right here. This is not the first gap bar. So if you were looking to, you're like, oh, fading this worked, I'm gonna fade this, and it doesn't work. You're like, what the hell? Well, the context is different. The market's now been in a trading range for over 20 bars, and we don't really know. We can assume this is the high of the day after bar 18. Usually the low or high is put in. The low is put in pretty quickly, and then the market rallied for a while. So we could assume this is a high, but that doesn't mean just fade the next gap bar. You want to just, and if anything, I would try and short something for a quick scalp. But I think it's just a sketchy trade because we're in a bull regime. I think the better trade would be having a limit order sitting right around highs, scalp here, maybe short 61 low. Still a hard trade because it comes after 4 bull bars in a row. So I think it's better to be long, flat, or wait for another second leg, like one, pull back, like two. Kind of a tricky day, honestly. Now that I'm looking at it, right around here, it gets tricky because this looks like it gets second leg, and then maybe you get short here on 68, but then it rallies. We're in a bull regime, kind of testing the breakout point. So keep that in mind. If you make good money in the opening and you have a width trend system, it makes sense for the width trend system not to really work in a trading range. You're gonna need a mean reversion system. And yeah, that's enough of that. So second leg down, second leg traps are common. Leg one, pull back, leg two. Leg one, pull back, leg two. Then we have an inside bar 65. 66 breaks out below 65, but then it rallies. It's a very small bar, not an inside bar, but inside bars are breakout mode, and we're in a trading range. So this could, if you're short or on 65, you're risking the chance of a reversal, and it actually does reverse. 67, good bull bar closing on its high. Tough to say if it's gonna get a second leg up. 68 immediate pullback, leg one, pullback, leg two. 69, 70 creates a second leg up. Funny looking pullback, but there is a pullback between 71 through 75, and then this structure gets its own second leg into the close of the day. So kind of just like we kind of had the similar market cycle day where it breaks out and then sideways, breaks out and then sideways. But yesterday's was for the bulls. Yesterday's was for the bears. Today was for the bulls. It's a pretty cool day. Both days offered good with trend trades in the opening, and then kind of had to play some mean reversion, maybe scalp limit orders, or if you're going to market order, just take a quick scalp, a couple points out the market. So hope you guys had a good day. What do we have? Thursday, Friday left. It's going to be a good week, everyone. Hope you guys are doing good. I will talk to you tomorrow. Thank you for your time. Bye.